Everybody likes a big old fat juicy price prediction on their favorite asset. So how's this? Bitcoin to $444,000 by mid-2026. Does this sound reasonable? Does this sound insane? Moonboy bullshit? Well, to be clear, that's not my current prediction, although I do love the sound of it. I'm in the 250K BTC club this cycle, but it's actually one of the targets laid out in an incredibly bullish academic paper published in the Journal of Risk and Financial Management, believe it or not. These guys. The report is called a Supply and Demand Framework for Bitcoin Price Forecasting. It's written by some cat named Murray Rudd and Dennis Porter. Cats, I guess there's two cats here. Anyway, it's not based on flashy chart patterns or hype-driven narratives, instead rooting its predictions in a simple supply-demand model. And if you take a look, you're going to find it also contains some pretty intimidating looking math equations, which I've never been a big fan of personally. But we're going to run through the main points here, and then you can make up your own mind. Is this Moonboy bullshit? Too bullish? 250K is much more reasonable. Maybe 200, maybe 180. Lower your targets. Or maybe they're not bullish enough. Anyway, eye-watering predictions are fun, but let's see what the meat of the matter is here. So as mentioned, the core idea of the modeling basically comes down to supply and demand, because as we all know, there will only ever be 21 million BTC, hard-coded, but also due to permanently lost coins, along with long-term holders who rarely move their coins. I mean, you basically have a giant group of psychopaths who have exited fiat and aren't coming back. This is their exit plan. Why would they sell? The actual liquid supply available for trading is much lower than people realize. The paper estimates just around half of the total supply is even available for trading. They point out that prices are set at the margin, suggest a looming supply shock. Now, from there, the model is built around the diminishing available supply, an economic function called constant elasticity of substitution demand curve. I mean, these nerds, man, they got the thickest glasses, don't they? What is this crap? Anyway, the paper calibrates its model starting from the last halving in April 2024, when the price was around 65K. And the estimated liquid supply was a little over 11 million BTC. And then using both a conservative as well as a more bullish scenario, it then projects forward in time from there. This means that applying some of those complex calculations and a couple of key assumptions, we can find some pretty interesting things here, particularly that the liquid supply basically keeps shrinking over time because more psychopaths keep buying Bitcoin. So as coins are removed through hoarding and sometimes also becoming lost, the amount of BTC on the market is essentially always perpetually falling as demand is continually rising. Institutional adoption keeps going up. Okay, particularly institutional adoption, ETF, treasury companies, all that kind of stuff, meaning demand is modeled to increase dramatically over time, particularly from those big money players, asset managers, corporations, even governments, with the most bullish scenario based on rapidly growing demand, which is exactly what we're seeing right now. I've literally covered dozens of Bitcoin treasury company stories in the last few weeks. And so basically from there, we get our future projections. But then still, why such a rapid price increase? Well, we're going to dig into that in just a second here. But guys, if you're trading Bitcoin, trading Solana, trading Ethereum, any of the big coins, you need to check out FEMX, the OG cryptocurrency exchange. They're trusted, they're liquid, they're built for traders anywhere in the world. Yes, that means it doesn't matter where you live, you can sign up to FEMX. You might need a VPN in some cases. Now, you can trade freely, you can trade securely, all the big coins, and I've got a crazy deal for you because right now, exclusively using the link right down here, right here, there, you're going to get VIP level 2 access. That means a 50% discount on spot trading maker fees and a 40% discount on future trading maker fees. That's serious savings. If you're a big trader, you know how much that adds up. Plus, you can claim up to $30,000 in deposit and trading bonuses just for signing up. The more you trade, the more you deposit, the more rewards you get. It's crazy. It's a limited time offer. Check it out. Link down below. Go get it. So, back to this 444K thing, okay? The paper gives us that $444,000 price by mid-2026 due to institutional adoption, continuing at an advancing pace. The golden bull run is essentially in effect. Global M2 is going up. All of the available supply of tradable Bitcoin shrinks. It mentions factors such as strategic Bitcoin reserves, pro-crypto accounting rule changes, which we just saw the Fed make a big announcement about banks being able to do whatever they want with crypto. Maybe even we could see mortgages backed by crypto as well. That could potentially be coming. It's all happening. Corporations are certainly buying, and I'm again losing track of the announcement. There's so many. State-level strategic reserves are literally happening. Texas just put together their first $10 million to buy Bitcoin. Pakistan's on board, Bhutan's on board, America's on board, Brazil's about to pass their strategic reserve bill, bringing billions of dollars into Bitcoin as well. You can easily imagine a scenario in which institutions keep locking up BTC in size and dramatically reduce market liquidity. Again, strategic reserves for countries, these guys have infinite money essentially, and they're going to buy millions of BTC, which is not just going to get insta-dumped back in the market. We also have a shift in perception about Bitcoin as it's becoming more commonly viewed as a long-term store of value. And we can realistically imagine that prices might continue to increase as Bitcoin's utility becomes more apparent to everyone. And in fact, the model makes even bigger predictions, even more bold predictions. If you thought $444,000 sounded good, then brace yourself for some even more bullish propaganda, some even more aggressive price targets. And by the way, before we reveal that, 444K in 2026, that's actually when the analysts think that global M2 tops, by the way, mid-2026. Interesting confluence, right? Anyway, the paper suggests Bitcoin could reach $1 million by 2027. That lines up with what Arthur Hayes is saying about $1 million Bitcoin in 2028. We could potentially get a $5 million Bitcoin by the early 2030s. This is all based on the modeling and assumptions that I've just outlined here. But actually, these massive targets, they do have some backing from other forecasts, with the paper itself pointing out that, for example, MicroStrategy, they published a model with Bitcoin hitting a whopping, insane, eye-watering $13 million by 2045, which I know is 20 years away, but still, it's a big move. It's 100x. You can still get 100x out of Bitcoin. You just have to wait 20 years for it. Guess I don't have anything to do except live in between now and then. Crap. Kathy Wood of ARK Invest projects a $1.5 to $3.8 million Bitcoin. Now look, MicroStrategy and ARK are naturally going to be talking about Bitcoin. They're talking their books. They want you to be bullish. They want you to buy so that their portfolio value keeps going up. The model from Rudd and Porter fits neatly into this Bitcoin optimist, Bitcoin bull time frame. And by the way, part of that bullishness, of course, comes from the possibility of a hyperbolic price explosion. If we get to 440K, 444 exactly K in 2026, and that's the pico top, you got to understand that last wick might go from like 300 to 450 in a few days, and then the weekly candle of weekly candles it will be. Now, this might all happen if the liquid supply of Bitcoin drops below 2 million coins, while institutional demand continues to take off, sucking more and more Bitcoin into the nexus of BlackRock and other players. There's also very little new Bitcoin coming into the market that's available to buy, resulting in a skyrocketing price as the dollar collapses in purchasing power relative to BTC. In fact, what that might look like is almost akin to a bidding war on a scarce asset. Oh, surprise, surprise, with big money participants who have essentially infinite money scrambling to secure their position. We have never seen institutional FOMO. Now we have very calm institutional buying. Big numbers, but it's calm. What happens when you have institutional FOMO, when you have a $10 billion day at BlackRock ETFs? No, really. What happens then? Have you even thought about it? Possibility. They've had $1 billion and $2 billion days. We are going to have $10 billion plus days. What happens when America says we're buying Bitcoin? Oh, everybody's going to want it then. Remember, 21 million coins, totally inflexible. Total supply is only going down. Liquid supply, right? Suddenly, the main buyers of institutions, you understand how much money they're bringing in. So it all sounds amazing for early adopters, long-term holders, but of course there are possible criticisms too. So let's check this model's weaknesses, because they ain't all sunshine and rainbows. Wish it was. At first, it seems to use some very simplified assumptions. Can demand really follow such a smooth mathematical curve? I mean, it tends not to work that way in reality. We see all the time how assets are heavily influenced by not just simple supply and demand mathematics charts, right? But unpredictable global events, interest rates, liquidity in the system, business cycle, manufacturing in Philadelphia, whatever, right? It's all amplified and narrative driven in a highly speculative market. Then there are some uncertain supply estimates. No one really knows how many coins are actually lost forever. Does Satoshi gonna come back and spend his million Bitcoin at some point? How much supply there's currently held in deep storage that at certain points might re-enter the market and increase the tradable supply? I mean, if you've been holding Bitcoin for years and it gets up to $1 million per coin and you have 10,000 coins, like you can do a lot of stuff with that money. It's not just about hodling anymore. It's about, well, what could your impact on the world be? You could feed a lot of starving kids with that kind of money, right? people might start doing this kind of stuff. Also, assumptions about steadily growing institutional FOMO could possibly be overly optimistic. At some point, institutions go, you know what, Bitcoin trade seems a bit crowded, all these treasury companies, whatever, maybe we're going to wait, maybe we're not going to keep piling money in. Retail doesn't show up. It's all just a bit too bullish, right? Macro factors may alter attitudes toward Bitcoin acquisition as well. Something breaks in America, people start selling the Bitcoin. They don't want to buy it anymore. Everyone goes risk off. Those corporate announcements aren't slowing down at the moment, but they could soon. And what happens when that happens? Just because we had dozens in the last few weeks doesn't mean we're going to have dozens in the next few weeks, but we could. So what do you think? $444,000 Bitcoin next year. I've thought 250K is the market cycle peak top target. Maybe I'm not bullish enough. Maybe it's too tight of a time frame for $444,000 Bitcoin. It's a little bit too optimistic. But hey, you know what? Screw it. If it happens, I'm here for it. Let's go. But the overall thrust of the argument, I think, makes a lot of sense. After all, limited supply and the domino effect increase in demand were part of the plan from day one. So if you kind of zoom out to maybe more the end of this decade, versus next year and into the 2030s when I think we're going to get $1 million price tag for Bitcoin. We factor in fiat debasement, generational shifts, the possibility of a seven-figure Bitcoin. Actually, don't want to say the possibility. I want to say the inevitability of a seven-figure Bitcoin comes into view, but not overnight. Probably not in 2027, 2028. But hey, you know what? Screw it. If it's going to happen, let's go. Let's do it. Thanks for watching.